I should just say a few words as to why I really am here. I really began life in the political risk world and trade credit insurance programs. And actually what happened, I suddenly realized that many of the smaller states in this world are destabilized politically and economically, obviously, when there is a massive natural disaster. Now, we are meeting, sadly this week, with a background of huge disasters. And yes, we might be concentrating where some of the journalists are mostly likely to be in the Caribbean and indeed in Mexico. But also, I'm the director of the Commonwealth Disaster Management Agency. And I don't know whether you're aware that also this week we've had 6 major earthquakes in the Pacific. We have now in India, Pakistan, and Bangladesh, 41 million people displaced from their own houses. And on top of that, I'm dealing with a terrible crisis in Bangladesh where we have a refugee camp where the host government has placed 400,000 people in an area which is now standing in a foot of water. So our problems become more and more magnified each year, partly because we're developing our technologies, and we're developing, alongside the technology, a greater know-how of insurance. When I began in 2000, I'm glad to say I was chosen as a result of a joint task force of the World Bank and the Commonwealth Secretariat. Our clients were really countries. Today, the most magnificent thing is that technology has actually moved everybody towards personal insurance programs. To me, that is hugely important, because when I'm dealing with floods in Asia, what we need to do is bring the money straight away to the people most affected, not have it languishing in a public account somewhere. And so with the help of cards like Visa and MasterCard, and I work with the Red Cross on this, we now deliver these cards which have a certain ceiling every week, depending on which society you're in, whether it's $100 for a week or $100 for a fortnight. And each time that money is spent, and it can only be spent in shops where you buy goods for your own family, you can't go and spend the money on the next racehorse meeting. Then we top it up. We tend to think this will only last about 3 months, but sadly, with the present happenings at the moment in the world, we're now looking at least 6 months to a year whilst this program will develop. Now, I've spoken far too much, and as I said earlier, I've really come here to listen also to our panel of experts. I must apologize that we have handheld microphones. I gather that recently a robot was here and took such delight in a button microphone that he walked off with it and is now packed away with it. So now we have here Stephen Catlin, who, if you're not in the insurance industry, I must say that he has been one of our great leaders in the insurance industry in the emerging markets. And indeed, the United Nations last year appointed him to be chairman of the Insurance Development Forum. He will explain why that has had to happen, but it's partly because there are so many products and so many different conditions around the world that somebody like Stephen has to realize how everything can fit eventually into the reinsurance markets. We also have Richard Leftley, who has been developing with AXA a program to do with the transmitting of money to local communities through MasterCard or Visa card. We have Robbie Schlinger of Planet Labs, and he has a very important role. He has 22 satellites, I believe, and they measure and image the world every moment of the day. And for us, it's really important to see where flooding is happening. It's also very important if you're in crop insurance as well. And so he will talk much about that. And Ricky Meha, who represents a group of some of the leading insurance companies in the world, and he has a very fine balancing act as their, I suppose, investor to make sure that they come up with the same products. So I'm now going to stop talking for the moment and hand over to Stephen.
Thank you. Thank you for your kind remarks. Good afternoon, ladies and gentlemen. I'm speaking here today in my role as chairman of the IDF, Insurance Development Forum, which was formed about 2 or so years ago. It is unique for 2 reasons. One, I don't ever remember the top 3 broking houses having their CEOs sat together in the room, same room, having a conversation. You put that alongside 12 P&C CEOs plus a couple of mutuals around the table, plus the CFO of the World Bank and what was Helen Clark, she's moved on to be replaced from the UN, plus Mark Carney. That is, and let me tell you something, it is one of the most difficult meetings I have ever chaired in my entire life. A bunch of alphas sat around the table. Why has it happened? And I think the answer to that question is because there is a common interest and a common challenge. And I think people have recognized that to try to meet this challenge on our own, individually as companies, be it broker or carrier, doesn't work. The minute a broker or carrier goes into government, the government assumes their pocket's going to be picked. We have been very poor at explaining the value of insurance as an industry, and we've certainly been very poor at explaining the societal value of insurance to the world. So we've come together, we work together. The industry has provided about 10,000 pro bono hours to date since we started of people adding value to the process of what we're trying to achieve. So what's that? Well, firstly, to try and close the protection gap. I don't know if you're aware of this, but the average amount of economic loss that is insured globally is 30%, only 30%. Haiti was 1%. Italian earthquake was 17%. And we've seen recently, already referred to, the desperate human deprivation of the last few weeks. In Houston, the protection gap there is absolutely massive. And there's going to be huge challenges about how flood exclusions work in a Texas court. And I do think as an industry, we need to sit down and work out how we can add value to flood insurance and reinsurance on a global basis outside of the pools that governments offer. So one of the things is to try and close that protection gap. And we're talking about billions and billions of capacity required for that to happen. But it's available at the right price. One of the problems I've been accused of is, of course, you're only trying to fill your back pocket. I said, well, hang on a bit. Yeah, I work for a private company, rather than the public sector, like the governments. And I have shareholders, and I have a duty of care to give them a fair return for what we do. That does not mean to say that in doing that, we can't add societal value. There's very clear evidence around the world now that the higher percentage of economic losses insured, the lower the human deprivation, the quicker the economic recovery, and the lower cost to the taxpayer. So what's not to like about that? One of our challenges is to actually get through to government ministers around the world. And politicians of whatever party, whatever part in the world, have a fairly short duration of tenure. And therefore they tend to think short term. And trying to persuade governments and municipalities to think in terms of a 1 in 10 year event, a 1 in 25 year event, 1 in 25 they've gone to sleep, and when you start doing a 1 in 100 year event, they're snoring. So we've got a real job to do here. Working with the UN and the World Bank is a new, unique experience too. That's never happened. And indeed, actually, for us to communicate as an industry what we do and why we do it to the UN and the World Bank hasn't been a walk in the park. So those are the challenges, and I'll hand over.
Thank you very much, Stephen. Hello.
So, Robbie, I got an email when I woke up this morning, and it was from the organizers of this event, and the title said that you're allowed to wear jeans and T-shirt. So, I knowing you and having met you on a couple of occasions, I did have a small laugh to myself as to whether you'd wear a T-shirt with a bow tie or just just the normal bow tie. So it's great to see that you didn't see that email, and lovely to be here with you. So these two gentlemen have access to governments, and they have convening power of kind of people like the United Nations. When I was 29 years old and a reinsurance broker in London, I didn't have that convening power. So I became fascinated by why it was that people in Africa and Asia simply didn't buy insurance. If you looked at the statistics, 3% or 2% or less of the population in those countries bought insurance. And yet they were the people that were affected every time there was a natural disaster or every time there was a disease outbreak. So back in 2002, I started out, I was one of the first people to start to realize that there was an opportunity to sell insurance to low and middle income families in Africa and Asia. And I started a company called MicroInsure. Today it serves 63 million customers in 16 countries across Africa and Asia. We sell a range of life, accident, and hospital products, although we do have about 200 different products. Those make up about 80% of what we do. Average premium ranges from about 3 cents a month to about 20 cents a month. And these products are sold virtually entirely digitally. So my biggest shareholder is AXA Insurance Company. I think they have, I don't know how many employees, I'm not sure they know how many employees they have, but let's say it's tens of thousands of employees. And they have 103 million customers as the second largest insurance company in the world. We've been going for significantly less time than they have, and we have 63 million customers and 181 staff. So you know, if you're going to enter into these communities and you're going to sell and service products into these communities, and if you don't have access to government, so you can't do these kind of top-down schemes where you're covering the whole of a small Caribbean island, or you know, providing health through the World Bank, you know, for the whole of these communities. If you're going to start at the other end of the spectrum, which is going house by house, village by village, and you're going to work your way from the bottom up, it's a massive challenge to do that. It's a huge challenge, and it requires access to some of the best thinking, but also some of the best technology that's available today in order to get incredibly simple products. So, you know, some of the things that we've learned as we've gone, very similar to our friends at BEMA, is that you have to have incredibly simple products. You have to have products, for example, which don't have age restrictions, because quite often you're dealing in communities and they have no idea how old they are. You can't certainly have exclusions, and you certainly need products where people can sign up and you can make it as easy as voting in, say, the X Factor. So sending a single text message is all that you need to do. So I think there's a huge challenge in reaching these communities. And certainly as a company, we've made an awful lot of mistakes in the process over the last 15 years. We've gone down some dead avenues, and Robbie, I know we've worked together looking at things like crop insurance and weather insurance, and have very different experience of doing that from the farmer level rather than from the governmental level. So you know, certainly it's a huge challenge providing insurance in the emerging world. But I think what you're starting to see on this panel is that there are a number of different ways that you can do it if you're interested.
If I may just add to what Richard said, I mean, he told me just a moment ago about the 63 million policyholders he's got in a very short space of time. The World Bank and the UN are pushing the IDF for a target of having 400 million new people insured by 2020. And when you hear what Richard's done, it's a target that we can achieve.
Maybe.
So, Ricky Mahar of GGH, and okay, yeah.
Thank you, Robbie. As you mentioned earlier, I sit here with my investor hat on, so slightly different perspective from the other two gentlemen. So my name is Ricky Mahar. I work for GGH. And GGH is an investment firm that invests in financial services. Over the last 10 years, we've invested in insurance businesses and also insurance-related businesses in emerging markets. We are made a team of industry experts who sort of specialize within the insurance sector. We bring deep industry knowledge and essentially take that to these difficult markets that we operate in. One of the points I'll follow up from where Richard left off is regarding the lack of trust that is associated with insurance in these markets. Often there's a lack of understanding around insurance products. There's a complex process to buying and selling them. It's not a priority. People don't understand what they're signing up for. And it's really important that we change that perception. And from our perspective, and I can talk firsthand about our experiences both in Africa and Asia, it really comes down to the product offering or the service offering, essentially, which is directly linked to the operations and distribution. I know earlier this morning we've heard a lot about sort of technology and the wonderful things you can do, both on the operation side and also distribution. But for us, our focus has always been on the basics. So when we talk about products, it's about simplicity, as you mentioned, Richard. Taking away those exclusions, providing something that fits the customer's needs, where they don't have the complex, burdens that we see in some of the. There's not enough suitability of products. So, sorry, I just lost my train of thought. Please go ahead.
So I do agree that it's a product issue when you're looking at this market, and I think trust is key. But quite often we band around trust when we come from the insurance sector, don't we? Because we come from insurance companies, so people should trust us. But the fact is that in the emerging market, people don't trust insurance companies. They've never heard of insurance companies. They don't have any reason to trust you. The companies that they do trust are, for example, mobile phone companies, which is why Microinsure, Bima, others have used them as a mechanism. And, the reason that they trust those companies is not because they offer great products. It's because when you top up your phone, it works. And you do it every day or every week, and there's very few things in your life that actually work. And so when that brand turns around to you and says, if something happens to you, I'll be there and I'll pay out for you. And what we found is that product is a minimum threshold requirement, right? So it's great that you've got insurance companies, but do you also find that it's also about process? So for example, the customer journey is equally important, if not more important, to success of a product. You need a good product, but if you have a great product and a terrible customer journey, I mean, have you seen success in your investment companies, or is process more important?
Just your first point on the lack of trust, I think you brought up an important point, was the frequency of use. So when we talk about, say, banking or telecoms, they've been using this since the 90s and 2000s, so people are familiar with the products that they're offering. When you talk about insurance, people still don't understand what it is, and they just haven't had the ability to use.
No one wakes up wanting to buy insurance, right?
Absolutely correct. And then to top that off, when you do have a struggling service on the claim side, then you have a bigger hurdle to sort of to deal with.
Yes, Robbie, if you would like, Robbie Schlinger.
Thank you. Thanks, Robbie. It's great to be here today. I'm on this panel, I think, from the perspective of some disruptive technologies that are just about to make its way into the market and into the developing community. So I am a co-founder and managing director here in Europe for a company called Planet, and we operate 190 satellites in space. So that's a lot. That's the largest constellation of satellites in human history, and our company was founded 6 years ago, right? So just that fact means that something's happening, right? We have a sensor revolution that is occurring terrestrially, and now we have access to new and novel products because of this leapfrogging capability of consumer devices, consumer electronics, mobile phones, connectivity. And that's permeating through every single industry. And working at NASA for about 10 years, we decided to redesign a satellite, leveraging those types of capabilities to then come up with a new mission. And so what we have today is a culmination of that. We've been on 17 different launches into space over the last 6 years, and now operate 190 spacecraft. And this is to image the whole world every day at 3 meters per pixel. So high enough in order to count spatial resolution, to count every tree on the planet, to be able to look at smallholder ag, to see urban growth and shift over time. But the temporal element of it is a new thing that really the established industry, which is called the remote sensing industry, is trying to get their heads around. And over the next couple of years, we're going to see a tremendous amount of new and novel products that are being driven by this near real-time, globally consistent, spatially explicit information feeds. So for instance, and for our community here, we have a number of customers that are in developing countries that are coming up with new financing products for smallholder ag, because you can now go ahead and use this overhead data and understand how productive it's been. And that actually gives parametric models for a banker to understand the insurance in order to then price the premium. Or not the insurance, but the actual financial instrument to price the premium. And I think this will also come into this community. I think it will be probably a couple of years, realistically, before major market insertion. But the trends are there with big data driven by the sensor revolution, with computer vision and machine learning and artificial intelligence finding signals through disparate different data sources. And it's no one data source that's going to actually give you that insight into what's about to happen. But that's actually the potential, and it's something that we need. We should have been able to anticipate the events of this week. Maybe not necessarily earthquakes, but you can actually understand your risk exposure of where you have the infrastructure for your society. But the floods, the hurricanes, and to actually anticipate some of these things, to deploy assets in the right places, and when it comes to also to come up with new insurance products where you pay out prior to it happening so that people then can prepare for it, and then you mitigate loss of life or loss of asset. So there are a number of different things that we can dig into on this, but I think from the perspective that I'm bringing to the conversation today is that there are some real additional leapfrogging technologies that are going to allow for us to have great insight into what's happening on the planet today so that we can make better decisions today. And then over the next couple of years, when you have a deep stack of that data, we'll be able to get to more anticipatory analytics, more predictive products, and this will actually open up new market opportunities for the insurance sector, but then also help allow for the entire global community to understand the societal role that insurance plays in order to smooth out the tumultuousness of markets, of disasters and catastrophic events.
Thank you very much. Before I sort of butt in, is there anybody in the floor here who would like to ask a question? Please.
Absolutely. So the question was, with the growth of what's happening in space and a lot more satellites, are there opportunities for insurance products in the aerospace sector? And the answer is yes. And in fact, we buy insurance all the time. We mainly use one of the largest underwriters is XL Group, so you can buy First of all, you can buy, as you guys know, you can buy insurance for anything you want to. And there are only about 90 launches a year, so there aren't that many numbers, and so it's a relatively small community. But you can buy launch insurance in case it blows up. You can get your money back. You can buy insurance for the performance of your satellite in space. In case the design lifetime, it doesn't hit it, you can get some money back for loss of revenue. And you can also buy liability insurance. So for us at Planet, we buy launch insurance for the launches that we absolutely need. Because some launches, we just launch 1 or 2 satellites as tech demos, and it's kind of okay if it blows up. But for the ones that we launched this year, for instance, one was 88 satellites at once, and the other one was 48 satellites. We bought insurance. But we do buy liability insurance for everything that we put in space. That's just a good actor. Space is a relatively new domain, especially in the commercial market. So much of this stuff is relying on people being responsible, not necessarily because it's legislated yet.
Yeah, I think it's amazing that you've got this kind of data set. And so it's great that you've put these satellites up there and what have you. But my question, I guess, to the panel that I'd love to get discussed is that sometimes I see these new technologies coming along, but it's not necessarily evident about how they're going to actually be used in the lives of emerging consumers, because that's what we're talking about here. So I'll give you an example. In 2004, the World Bank came to us and said, okay, there's a whole bunch of farmers out there, and they can't get access to credit because the banks are worried that if the rains don't come, that they won't be able to repay the loan. So can you come up with some kind of product? So we looked around and we realized that crop insurance wouldn't work as it traditionally is because these farmers have 3 acres of land or 1 acre of land, and they're dispersed all over the country. So you can't go and visit their farm, it's not economic. So we started to do these kind of parametric products where we would take weather stations, and we would take the weather data historically and would work out the likelihood of a drought, and then we'd say, okay, 20 kilometers from that weather station, we assume the weather's going to be the same, and we came up with a parametric weather insurance. I think it was one of the first ones, 2004, Malawi, right? And we realized, sooner or later, that actually these data sets weren't available. You know, you took a country like Rwanda. The Rwandese government came to us and said, could you do something like this in Rwanda? There used to be 225 weather stations in Rwanda before the genocide. After the genocide, there were 3, okay? So these data sets have been kind of systematically destroyed over history in places like Africa and Asia. So we started to turn our attention to remote sensing. So we launched our first remote sense parametric insurance product in 2007. And we did tons of work. We spent millions of dollars from people like the Gates Foundation and IFC and all these guys. And we spent 10 years as an industry, not just MicroInsure, but lots of different organizations doing this stuff. And we, to our kind of shame, I guess, we got very focused on its technology, its satellite data, and somehow this is going to be fantastic. And we lost sight of the fact that farmers didn't want to buy the product, right? So the product cost more than the farmers were willing to pay, which is why in the UK, in the EU, in the US, weather insurance is subsidized by the government, right? And the farmers weren't willing to pay the true cost of this product. So I think when we're talking about technology, whether that's blockchain or satellite information, it's fantastic that these technologies come along. But I think we have to start by asking ourselves the question, which is, what does this technology do for me cheaper, better, quicker, for the emerging consumer? And that's going to be relevant to them, because otherwise just putting technology on the shelf and saying, okay, so now I've got technology, I've got the ability to take a picture of the world's surface every day, that's fantastic, that's amazing. How are we going to use that, though? And I think one of the things that I've seen is that those kinds of technologies are really, really useful when you're talking about the Red Cross or you're talking about the UN, because that kind of data set can be used by those kind of organizations to provide protection to the whole of a country. But it's really difficult to use those technologies in a meaningful way when you're dealing with individual farmers. So I kind of, as a panel, I'd love to know your views on how we deploy these technologies.
Can I just say something that, whilst we're talking about the great development and progress in this kind of matter, the problem is sometimes when you get crop insurance bought by cooperatives, and different farmers obviously have different yields, and everybody has to pay the same kind of premium. And then what happens is that a senior body beyond the crop cooperatives starts adding money as a kind of fail-safe. which then distorts actually the real value and premium, and therefore upsets the reinsurance market quite considerably. And then about 3 years later, everybody wonders why nobody wants to go forward on crop insurance. But on another score, and this is something which is extraordinary, because actually I'm a Commonwealth man, I have to say, rather than a European man, but one area which I think is really good, which the French and the Swiss have practiced a long time, is decennial liability. Why do I say this? It's because when you build new buildings, new villages, it's the buildings themselves, the community, which owns that insurance. So if there is another disaster, that whole village is actually protected by the same premium and insurance program. So you don't get somebody who falls behind in premium, who can't afford to pay this. And also the same thing can now move forward to protecting businesses. Even motor car insurance can be done on a decennial liability. And I think this is an area, Stephen, which we have to look at for the developing emerging markets, because the very fact that people don't necessarily want to understand insurance, but they understand banking in microfinance. But we've been talking to one or two of the mobile telephone operators about them charging, say, 3 or 4 cents every month for an insurance. So actually the recipient of the insurance doesn't have to worry about finding that money. But if they come in a local fishing village and they say, we have lost our boats, then that insurance is paid for already. And they can then receive the money directly to their community, rather than that money finding its way to be log-jammed in a rather bigger community, a local provincial government, and you don't really know whether the fishing village, which really has been upset by a hurricane, will actually ever receive the money. But the other thing, which I'm working on with the Red Cross, is to bring money through a card like Visa and MasterCard directly to the community, so that within the first 72 hours, there is always an amount of money to be given to people. So they don't have to wait for loss adjusters. People don't have to have a wrangle, really, how much did you lose? And matters like that. There are basic human demands which have to be met within the first 72 hours, the golden hour of recovering from a disaster.
Thank you. I do actually agree with you completely that in microinsurance, which is what Rish is doing, where you can actually get the money to the claimant in 72 hours, is a fantastic achievement, and nobody else can do that. So often when you do it the other way around, you have sort of relief after an event. The money gets stuck somewhere and doesn't necessarily get to the end user, and some of it gets lost in the middle in certain countries. So actually, there's a real advantage to the policyholder of having microinsurance where he gets his money in real time. It also has the effect of making the policyholder himself or herself more fiscally responsible. And that's a good thing. I think something we haven't talked about yet so far when we look at all this is the best way of reducing loss is to have risk mitigation. And we as insurance carriers should be talking about risk mitigation first before we do anything else. And we should be encouraging governments to think about risk mitigation in terms of planning, in terms of building regs. Florida is a good example nowadays. Houses built in Florida in the last 10, 15 years can withstand far greater wind than was the case 25 years ago. How did that come about? Because actually insurers are saying, if you want insurance from me, this is what it's going to cost if you don't do this. It can be a lot cheaper if you actually get involved in risk mitigation. Now, the real challenge here, though, is there isn't the money in some of the emerging nations to fund this. And I think that's where Western society and established nations have a responsibility to help. Now, very recently, DFID has created a £30 million fund, which has about 50 million come from the German equivalent, to start recognizing and saying, right, how can we help emerging nations to fund their risk mitigation, which may eventually lead to some risk transfer, which we can then price and sell to the end policyholder. But that there are some very significant challenges here in terms of what people can afford and what they will afford. And we have to develop products that absolutely react quickly. The parametrics for, say, crop is a great advancement. The challenge with it, as with all parametrics, is the basis risk. And you have to keep on looking at the parametrics every year to try and make certain you're not actually selling somebody a pup. Because actually, they nearly made the parametric, but didn't quite do it. Because actually the parametric didn't really contemplate what happened. If it had, it would have been within the parametric. So there are lots of complex challenges. I'll just say one more thing, actually, before I hand over. There's something else that I don't think we as an industry have really got our minds around yet, which is the impact of artificial intelligence in terms of how we can analyze data. The data that's involved is available readily, publicly on the internet is unbelievable. If you have an artificial intelligence that can actually synthesize that and get into the same format, suddenly we can be much, much better at predictability.
So, Richard, I think you're totally right that it's about an innovation in a product and in a business model that's absolutely necessary for new technologies to actually make its way to have the effect in society, without a doubt. And I think the work that you've done for crop insurance early on, and also we've seen another Silicon Valley VC company that was called Weatherbill, renamed to Climate Corporation, and then bought by Monsanto, and is now really a kind of a data analytics group. They were not able to really truly, great team, great technology, great stuff, but not really able to truly stand on their own feet for crop and weather insurance. And it's so, but it's still a good, there's a nugget of something in there that we can break apart a wicked problem like that to try to see if we can address some of those things. But it's not obvious, and it's not going to be easy by any means. We may need more data, and we may need more AI in order to, well, really, more data to train the better AI in order to actually get at things that are more accurate. And then with respect to microinsurance as well, I completely agree. It is about innovation in the product and in the customer experience, and bundling that into maybe being able to get a loan. If you can bundle insurance into a loan, because you are actually getting access in order to invest it into your farm, for instance, may be one ways in which we can actually get at that business model and that product innovation.
Can I also just briefly talk about an exchange which you probably don't necessarily know in this room? It's in Singapore. It's the Impact Investment Exchange. And they're beginning to create bonds for women's sustainability livelihood funds, which means that actually the Western world investor can invest in a 4-year bond with a 5.6% coupon, which is amazing. But then that money allows, during that course of their time, for people who are in societies where women need to have access to money to get on, can actually find that money. Now, what happens, and it's very clever, is that when the women find a way of earning a livelihood, they then start giving back some of that money to that bond. And it's already beginning to work very well in Singapore. And I suspect what we will be looking at quite soon is resilience bonds, so that different societies across the world can also have the same advantage, where the West puts in money and gets a coupon, and the people who really need it at a given moment receive that money separate from government and donor nation handouts. But I think the donor nations will have to act in some way in that program as a reinsurer, or at least creating a kind of platform for excess of losses. Has anybody got another question? Yes.
So the question was, to what extent is microinsurance reliant on telecom companies? I think, so when we started off, we started working with microfinance organizations because this was in 2002 and the telcos were still at a very, very early stage at that point. I think that there's been really two different approaches to how to sell insurance to the mass market, so low income and middle income market. One has been a kind of B2B approach. So you say, okay, I'm going to go find an organization that has a good reason to embed my product into my existing service. So a bank or a lending organization, if they embed insurance in, it means that the person's more likely to repay the loan because if they get sick or they have an accident or something happens to them, then they have, they're protected and therefore they're more likely to repay the loan. So that's why banks bundle insurance into, or lending organizations lend it in. Telcos, when all of us started working with telcos originally, it was because we realized that mobile phone companies had a fundamental issue in emerging markets, which was that their consumer base are prepaid customers. So everyone has multiple SIM cards, everyone's topping up their phones with about $5 on average, depending on the country, a month, but they're spreading that out across different mobile network operators. And so where we all started off when we first started working with telcos was that we went to the telcos and said, look, if you offer free insurance to your customers in return for increased loyalty, so if you top up more with my mobile phone, with my SIM card, then you will receive more free insurance. So it was an encouragement to try and encourage people to use one mobile carrier rather than another mobile carrier. And that's how we onboarded millions of people onto insurance the first time, and we got them interested. And the challenge now, which BIMA, Microinsure, Inclusivity, a whole bunch of organizations are working on is they've the market's kind of moved beyond that, and we're upselling and we're convincing people to pay for insurance. I think the point here is that we're not reliant upon telcos, we're reliant upon businesses that people trust and that have an embedded payment mechanism. So if you want to serve low-income people and the premium is 3 cents, 5 cents, 10 cents, you cannot, it's very, very challenging to go door by door. You need some level of, you need a kind of an acceleration in terms of trust. So you need to piggyback on someone else's brand, which can be a telco, could be a bank, could be any number of organizations. And you clearly don't want to build a payment mechanism right from ground zero, bearing in mind these communities don't have bank accounts, don't have debit cards, don't have credit cards. So you need to use airtime as a way of, as a currency. So you need to be able to deduct, tiny amounts from their mobile phone, or you need to be able to hit their mobile money account. Most people imagine that we all do this stuff using mobile money accounts. We don't. Most of the transactions that companies like BIMA and Microinsure do are airtime deductions, because most people don't actually have and use a mobile wallet. You hear about it in the news all the time, but outside of Kenya, no one really uses them. So it's airtime deduction. It's hitting their phone and taking out kind of airtime deduction. So you need that kind of trusted platform. Someone trusts the brand that you're selling through, and you need a payment mechanism to be able to do it. So we're not tied to telcos, but we are looking for organizations that give us scale, a trusted platform, and the ability to collect payments. And if you have that, then it can be a bank, it can be a mobile phone company, it can be a utility company. Increasingly, it can be kind of B2C or B2B2C type models that are emerging. All of those are possible, but you have to keep in mind those aspects of what you need from the market.
Anybody else with a question?
Have you observed any good practice solutions or resources originated from emerging markets which could potentially help tackle the challenges in developed markets?
Happy to do it, but anyone else? If you want to start. So the question is really about reverse innovation, right? Well, yeah, I mean, that was one of the reasons why AXA invested in Microinsure, because they said, okay, so let me get this right. We signed up 20 million customers in 120 days. In India today, we've signed up more than 100,000 customers. These are numbers which large insurance companies find kind of troubling to some extent, And how do you do that when the premium is just a few cents, right? So if you can do that in those countries, how could we take that technology and come back and reverse it back into our countries? Years ago, I had a phone call from one of the big TPAs, one of the Blue Cross Blue Shield type organizations in the US, and they were like, how do you sell health insurance that costs $1 a month? How do you do that? Kind of talk me through how that works, because we can't, we're selling policies that cost $1,000 or $10,000 a month, and for which the administration is thousands of dollars. So how do you do these kind of products? And so I think people are starting to look to the emerging world. You look at a company like Zhongyang in China. It's an online-only insurance company. On 11/11 last year, so on Singles Day, their equivalent of Black Friday, they signed up 100 million policyholders in a single day. There's a lot we can learn from what's going on in the emerging markets as to how to market these products and how to really scale these products.
I'll just add a few points to that. In our experience, what we've learned is it's really difficult to paint these emerging markets with one brush. So rather than the reverse engineering, as you're referring to, there are a lot of commonalities, but each of these countries are unique. The population demographics are different, the cultures are different, the spending habits are different. So you cannot really go with that mindset that this model has been tried and tested and that it's going to work in every single country. We found that insurance companies, from our side at least, we need to be very patient and flexible in our approach. That yes, it may have been very successful in, say, a certain place, but it doesn't mean it's going to happen again. A good example is bank insurance. For us, in Western and developed markets, it's tried and tested. However, in certain countries, we found that it doesn't work, and there are many reasons for that. It could be It could be from a regulatory perspective, where the regulations around it are very cumbersome. It could be between the balance of power between, say, insurance companies and banks, where the fees that they are charging, they're unable to get agreements on that. Or in additional, it's the operational elements, where you're unable to service the customer, which goes back to what we were talking about earlier, the trust element. So if you're not able to provide claims payments within 48 to 72 hours, you're really tarnishing the brand of insurance companies and banks at one go. So you really need to be, I guess, aware and take an approach that is for, I guess, relative to a specific market, and know that it's not going to work every single time.
Actually, I think we're almost coming to the end of our session, sadly, but does anybody else have another question?
You can't give a sweeping answer for that, but it does vary per government. Back to something I said earlier on, we as an industry are suffering because we haven't actually explained the societal value of insurance in the way we should have done. So it starts with the responsibility with us, in my view. Secondly, when you get to, say, like the Caribbean, and I would get that example of Florida a moment ago. In the Caribbean, they don't have risk mitigation particularly, but they can't afford to have risk mitigation. And the idea that the Caribbean can fund its insurance, reinsurance needs on its own doesn't work. The economies aren't big enough. And that's where, if you believe in a global society, then established nations do have to step in. But if you look at governments, in fact, I had an interesting meeting not very long ago, actually in Bermuda, and we had somebody from the Fed came down to talk to us, and was pointing out that they'd realized that individual states within America who are not acting fiscally responsibly, i.e., they're in a wind zone, they've got a bridge that's going to need repairing, well, we're not going to bother with it repairing it ourselves, but the next wind comes through, it'll get knocked over, and the Fed will pay. And the Fed has sort of woken up to that, and they're now trying to get individual states to be fiscally responsible. Part of being fiscally responsible starts with risk mitigation, then goes on to risk transfer. But actually getting government ministers to really truly recognize the benefit we can give them is an uphill task, I'm afraid.
Thank you very much, Stephen. And in fact, there are one or two programs, like the CCRF, the Caribbean Catastrophe Risk Insurance Program, and there's a similar one now beginning in the Pacific. But the problem is the money goes to those governments sometime after the disaster actually happens. And really, when they're getting only 6 million because that's what their parametric trigger allows, is not necessarily enough when you're faced with such a disaster as we're looking at the moment in the Caribbean. Actually, that money would have been much better organized if it went straight to the people who need it, who are living in those villages, rather than to governments, because you have no idea what will happen to that money. You can't dictate to a government how they're going to use it. Recently, I've been asked by the United Nations to look at all the World Heritage sites, not only because of the risks of natural disaster, but also the human hazard, which unfortunately has been creeping in, especially in the Middle East. And how do we protect that? And can governments really pay for that? Because once you destroy a building, you can't really rebuild a building of 2,000 years. But what you can possibly do is create an air-conditioned museum, which will allow people to walk through and see what that society was like 2,000 years before. But we're still at the early stages of talks and discussions, and I know Stephen knows what all that means. But thank you so much for listening to us, and I hope we've been able to help with some of the understandings of our subject and to show how technology is really helping our world of the insurance. And we hope the other way around is happening as well. I certainly enjoyed listening to my panel, and it's always good to learn more and leave a room with more knowledge than you actually arrive with. So thank you very much. Thank you.